Everyone stick with the us versus herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. And if you haven't yet subscribed to our new Options Trading Live channel, link is below in the description, along with our Discord and our Options Trading group on Facebook. I've been gone all day. I was trading Disney earnings, so I'm just getting to I wasn't able to live stream after market close today, so it's going to be kind of a combo of what I did with Disney earnings, where I think it's going to go, and along with my watch list and some of the trades that I did earlier today. I closed them out at open. So obviously we're looking at Disney right now. Disney right now is literally flat. It closed at 144.73. It's currently at 144.91. The expected move on Disney was $8.90 for this week and $10 for next week. So those premiums are probably going to be toast tomorrow. So let me look into Disney. Look at what it did. I'll show you my trade here. So Disney beat expectations. They are now, Disney Plus is now at 26.5 million subscribers, which is amazing. EPS came in better than expected, $1.53 versus $1.44. Revenue was better than expected, 20.86 billion versus 20.79 billion. And a couple things with this earnings report here. Disney did not update its guidance for the service. The company previously forecasted between 60 million and 90 million subscribers by the end of 2024. Iger said that on the call, it's far too early in the rollout of Disney Plus to change the guidance, especially as the service has yet to launch in some international markets. So it's not that they just didn't change the guidance. So they didn't give an update. They didn't change guidance. They're still sticking to their guns. They're still looking at 60 and 90 million subscribers, and they currently have 26.5 million within the last quarter. So, well, since launch, I guess you can say. So he's looking forward to that. The one thing I will say, that I was concerned about was the coronavirus, how that was impacting them. Revenue was up on Disney parks, grew 8% during the quarter, and the company said the recent closures of its parks in Shanghai and Hong Kong will negatively impact its fiscal second quarter and full year results. So that might be why the stock is pretty flat right now. But the extent of the impact will depend on how long the parks remain closed. So we did talk about this. We're not sure how long it's going to be. Like, they could open next week. They could open in December. We don't know. So right now it said Disney said it expected operating income at Shanghai Disney to fall by 135 million in the fiscal second quarter, while Hong Kong Disneyland could see its operating income decline by about 145 million in the second quarter. So right now they close on January 25th and are closed until further notice. So Shanghai Disney is currently closed and Hong Kong Disney is also closed. So right now, what I did on Disney, pull up my trades here. So Disney, I've been trading a little bit. Let me pull up here. Made some money on Disney today. I'm up like 340 today overall. But let me pull up Disney here, and I'm going to go back to kind of the trades that I've been going for. I was trading this pre-earnings. I bought the 140 call for February 14th for 216. I sold it for 340, so I flipped it quick for about 60%. Then I bought the 143 call yesterday, and then today at open I sold it for 530. We had a nice spike at open. We had a nice spike up. It hit 145.61, then dropped down to 143. So I sold right at open. So I sold a 143 call. My goal was to take the profits from the pre-earnings trades and roll them into earnings. So what I did with that, I did 2 earnings trades on Disney. I bought the 155 call for February 21st for $1.65. So I'm in 2 expirations. I'm in this week's expiration, and I'm in the February 21st expiration. So I bought the 155 call. This was up a little bit. I bought that for 165. It was trading up to 186 at close. Obviously, that's going to be down. With Disney being flat, we're going to have an implied volatility crush. But the good news is, because I bought that call, I have some time on it. Now, the second trade that kind of backs that trade up is I sold premium for this week's expiration. I got a $1.05 credit, and I sold 2 of them. I sold 2 puts of the 145 puts, and I bought two of the 143 puts. So for this week expiration, this is kind of how it looks right now. Right now, it's currently out of the money. Disney's at 145.02. We're kind of sitting on this, so we're going to have a nice premium crush. So I'm going to be able to collect some premium from that if it stays around this area. So if we stay flat or move up a little bit, I'll be able to collect some premium, and then I'll have some time for that 155 call to work out. If the 155 call doesn't work out, not a big deal. I was able to do those pre-earnings trades, so I was able to take some of the risks. I wasn't risking any of my own capital. I was risking the profits that are already made from Disney. I did think that this was going to be a blowout earnings, and Disney Plus was a blowout. However, now there's other factors, and the stock is literally sitting idle. So it might be a case where this could go up over the next couple of days. You know, when stocks are flat like this, it could go either way. It could go down, it could stay the same for a few days and then go up. But I'm anticipating, because earnings weren't that bad, that we're going to be going up. So that's why I'm going to be holding. That's why I want to give myself, when I bought premium, I gave myself some time on that February 21st 155 call. We did touch 149 after hours before coming back down to like 142 area, but right now it's literally, we're up 50 cents, and most of the premium is going to be burned for this week. I mean, all this stuff is going to be, all these premiums are going to be burned. Like the 140 calls, we're going, 140 puts are going for $2. 150 calls, we're going for like $2.50. So that's most likely going to be burned tomorrow if we open at 145. Luckily, today's only Tuesday, so you know, you have some time, but just be aware that if you're buying premium, that's what's going to happen. So I kind of flipped it a little bit. I bought premium for 2 weeks out, a little bit over 2 weeks out, and I sold premium. I shorted premium for this week. So we're going to be okay, I think. And plus, we made some money on it already. I made some money on Google. My Google Iron Condor paid off. I was able to make a $72 profit on that. I needed it to be between 1380 and 1580, and Google did just that. So I opened it. It was a little bit difficult to close because it did pop down to 1421, did recover. If I did hold, I would probably make more money, but I just want to take the risk off. My max profit was 155. I made $72 out of the $155, so I'm going to take it. I'm not going to hold it, you know, in case this decided to bottom out like from 1420. It did hit 1398. I just didn't want to take the chance, so I took the profits and I ran with them. So things that I'm looking at tomorrow, obviously I'm looking at Disney. Another stock that I'm looking at right now is Boeing. So Boeing is relatively flat. I'm not looking to get into it like tomorrow per se, but it is something that I'm watching. It's been holding like the 315, 318 area. It tried to get above 320 yesterday and dropped. Right now it was pretty much flat, a little bit like a $3 range. And right now I'm going to see if it's consolidating down here and if it's going to try to go up or if it's going to break down. I was going to make another leg down. So right now it's on my watch list. I'm just watching for a bigger move for Boeing to determine which way it's going to go. We're now, let's see, 1, 2, 3, 4, 5 days out after the last earnings. And it's actually for the worst earnings in 20 years is actually holding up relatively well. Snap. So Snap had earnings. I'm going to be looking at this tomorrow. I didn't have enough time. I wanted to short it today. I just didn't have time. I was actually downtown Chicago, and just time got away from me. I literally just got back. So Snap, they just had earnings. They're down 16% right now, I believe. Their revenue was 561, missing the analyst expectations of 563 million. So keep in mind, their revenue is 561 million, not billions. So they're in the millions. This is a small app compared to like Instagram and YouTube and all that. So just be aware. And the company did grow its daily active users from 218 million up from 210, and they did beat EPS as well. So you know, we'll see what happens with Snap tomorrow. You know, I'm thinking it might come down. It's going to come down to 16, but it probably, I think, might come down to the 14 area. So I'm looking down. I'm looking at the 14 area on Snap right now. Shake Shack, I'm currently holding a debit spread on Shake Shack. I need it to be above 70. It did pop above 70 today before dropping to 69.85. On the 1 year chart, I think that it's trying to, you know, it's kind of chilling down here between the 66, 65 area, and now it's coming back up. I think it's going to try to make another run at 72, 73 before trying to fill this gap here. I think it's going to try to fill the gap, but it got rejected last time, and now it's trying again. So on keeping that on watch. Right now I need it to be above 70. I'm currently down 47 bucks on it, so not a big deal, but we'll see what happens with Shake Shack. But I'm playing the gap fill for that currently. And then for earnings, tomorrow night I'm starting to prepare for probably Qualcomm and Peloton and go through there. These earnings are tomorrow after close, and I will be going through them pre-market tomorrow. So if you haven't yet subscribed to our option trading live channel, link is below. I'll be live 30 minutes before market open. And guys, if you enjoyed the content of this video so far, hit the like button. I'd really appreciate it. Qualcomm, I'm looking to be bullish on Qualcomm. I liked how it's bouncing off 85 here. I think that's going to make it run to 96. Now, or 95. I don't know if I'm going to play this for sure. Right now, I'm just going to watch the price action, see what it does tomorrow. But it has been having a great year. It's gone from 49 up to 88, all the way up to 96. So right now, it's currently at 88, 89 bucks. So I'm looking for a bullish position on Qualcomm. And then Peloton, I'm looking for a bearish position, being at the high end of the range here. I do think that they're going to miss. So I do think that it might come down here like 27, 26. I'm looking to sell some premium. I wish I sold some premium in Snap, but Peloton premiums for this week, 189% implied volatility. Next week, 131%, and then 3 weeks out, 112%. So I'm looking to sell some premium in there. And same with, Snap was actually, I'm kind of upset I missed this opportunity to sell some premium up in here because this was 154, 98%. But Peloton looking to sell some premium, being 189%, 131%, and 112% even 3 weeks out. So there's going to be a pretty big expected move. I mean, the expected move for Peloton is $5 on a $33 stock. So it's expected to move over 10%, 12%. So for that, and that's for this week. Next week is $6. So it's expected to move like 20%. So just be aware. So I'm looking to sell some premiums in there, see if we can stay within the expected move. But I'm looking to be leaning more bearish on this. So it kind of goes down to 28, 26 area would be ideal. So we'll see what happens. But that's pretty much what I'm looking at tomorrow. Those are my trades. If you guys like the content, again, hit the like button. Let me know if you watch this video to the end and what you're trading tomorrow. If you made money today, comment got paid. If you lost money today, comment learned a lesson. As always, stay safe, stay green. It's us versus herd.